Yo, how's it going, viewers of the tube? My name is Tyler of Chico Crypto, and you know the drill. Grab a beer or spark a joint, because it's time for crypto, and of course, a cold one. Today's brewski comes from my old hometown of Kona, Hawaii. Kona Brewing Company's longboard island lager. So let's get into this. Gonna get me all jacked up. So today I would like to talk about something that some think may be cause for concern: mining cryptocurrencies, especially Bitcoin. One of the most upvoted posts on our cryptocurrency yesterday was a picture of the cost to mine one Bitcoin based on the average electricity rate per country. Let me tell you right now, it doesn't look so good. In more developed countries, the cost to mine is at an unsustainable rate at the current price of one Bitcoin, $3,506 as of shooting this video. For example, it costs $13,482 in electricity to mine one in Belgium. In Denmark and Germany, even more, $14,275. Costs go down a bit in other fully developed countries who have massive infrastructures to keep electricity costs down, like the UK at $8,402 to mine one Bitcoin, and the US, $4,578. But even in less developed countries, it costs more in electricity than the price of a Bitcoin. Indonesia, it costs $4,329. Peru, it costs $4,140. Russia, it costs $4,685. Even in Taiwan, it's still expensive at $3,774. In China, Egypt, Georgia, India, Iran, Paraguay, Saudi Arabia, and Serbia, it is just barely profitable still. Miners only making $100 to $300 in profit per Bitcoin. There are still a few countries that it is still good profit of over $1,000, $4,500 per one Bitcoin. Bangladesh at $2,379 cost. Belarus at $2,177 cost. Kuwait and Myanmar at $1,983. Ukraine at $1,852. Uzbekistan at $1,788. Trinidad and Tobago at $1,190. And finally, the most profitable of them all, guess who? Venezuela at $531 to mine one Bitcoin in electricity costs. It's a rough world out there for miners right now, and a lot of rumors are going around that miners are abandoning their rigs, especially in China. Now, if we take a look at the hashing distribution across the globe based on mining pools, we see that BTC.com and Antpool, which are currently owned by Jihan Wu, control 31.8% of the total hashing power. Then you have to add an F2 pool, which is another Chinese-based mining pool. They control over 6.2% of the hashing power. That means that China controls nearly 40% of Bitcoin's hashing power, plus or minus 5%, because anyone from across the globe can join these pools, and we are not including the small to medium-sized pools. Right now in China, mining rigs are being sold by the kilo. This means they are being sold by weight, not by unit. The phrase miners sold by the kilo even topped trending topics on the Chinese search engine Baidu. Now, Chinese mining pool, F2 Pool, responded to this and said, yes, it is true. It is said that they are sold for 140 yuan per kilo. This is about $10 per pound. Now, to put this in perspective, an Antminer S9 is about 5.5 kilograms. Based on what he says, one S9 is being sold at just 770 yuan, or $110 per unit, while a year ago the price was 20,000 yuan, or $2,880. Then you had a video start circulating a couple weeks back of what looks to be miners disabling entire operations, which caused a ton of uncertainty. Here is a short clip now. So what to believe? Well, the person who spread the video, W1, got accused of lying and spreading FUD on Twitter. And the accusers attribute it to a flood that happened in June of this year, which destroyed hundreds of GPUs and ASIC miners in a region of China. Then W1 posted a picture keeping the rumor going, talking about F2 Pool. She said, owner of @F2 Pool official, one of the top 5 mining pools, saying the currency miner are sold by the pound, more of a parody. So that is not true? The fact is, say if you can't mine with the S9 with profit, someone with better unit economic will buy at a very low price to recycle. Well, the owner of F2 Pool, Mao Xingxing, was interviewed about the situation. He said the mining market is under triple pressure in China. The most pressing problem is that hydropower plants in southwest China are experiencing a dry season. Second, the miners are in need to upgrade their mining equipment, as the S9 has been around for 3 years. And third, which is obvious, because of the recent plummet of the Bitcoin price. So it's obvious smaller pools in China are having problems. But what about the big dog pools controlled by Jihan Wu? Well, there was rumors circulating that Bitmain is having problems with debt and is on the verge of losing its key chip maker, TSMC. The rumor was spread by CoinGeek, and Jihan quickly responded the next day, saying that CoinGeek is controlled by fake Satoshi, aka Craig Wright. Alright, to the point of all this. Is Bitcoin mining really going to fail, and what does the future of Bitcoin mining look like? This all comes down to the beauty of the Bitcoin code and a free market that allows this to settle out. Even if those mining rigs are being taken down, they are not being just sold for scrap. That is laughable. Most of those mining rigs in China are most likely being shipped or sold to places with cheaper electricity, like some of the countries mentioned earlier. All these miners are not going to quit because the cost of Bitcoin mining is dynamically adjusted. For example, if 10% of the miners choose to turn off their machines, the mining costs decline because the difficulty of the Bitcoin algorithm adjusts too. Those miners that stick around will see increased profitability because they can mine more with what they have. This is a readjustment coded into the Bitcoin software by Satoshi. China has normally dominated the Bitcoin mining market, but this is a time that other regions are able to get their toes in. Not just one group or one region will be able to control Bitcoin for that long, and I welcome the readjustment with open arms. Bitmain has been able to dominate the market because they mine with their newly developed machines before putting them in for mass production to the public. They actually just got done with the antminer S11 and S15, which are on sale right now and will be shipped sometime in January. So most likely Bitmain has been mining with these two machines before anyone else could get their hands on them. Sounds unfair, right? Well, Bitmain can't keep this up for long though. They have competition coming at them from all ends. Major example of this is Samsung. Yes, Samsung said they are getting their hands into the game and is currently engaging in the manufacturing of cryptocurrency mining chips. The chips look to supply ASIC manufacturers that produce consumer-ready hardware to sell to the public. That is big competition to Bitmain's chip supplier, and this is a good thing to the space. Bitmain has dominated the industry for years now, and I can guarantee you, 1 year down the road, the mining distribution is going to look a lot different. Cheers, viewers, and I'll see you next time. Fucking shut up, bird! It's a rough world out. Oh, fuck you. Doing it right when I...